And welcome to today's morning report analysis videos on Monday 9th of October with me, Rich Perry, market analyst at Hantec Markets. It's Columbus Day and it's a fairly quiet looking consolidation of a day at the moment. I'm not expecting a great deal of direction to really come out of these markets. Apart from sterling, which has taken on a bit of a recovery in the last few hours. Weekend, or certainly yes, last week it looked like the government of Theresa May was about to crumble around her, and seems as though over the weekend it's a little bit of stability to a certain extent, but I think this pressure is still on. But I think politics is driving sterling at the moment. It was saw sharp declines in the wake of the Conservative Party conference, and it seems as though that she may be about to do a reshuffle that might help to sort of solidify her position for now, but I think it's going to be an ongoing situation in the next sort of weeks or months as to how sterling moves around. But nonetheless, sterling is about 75 pips higher at the moment. Other than that, we've got markets basically flat. You saw that non-farm payrolls report on Friday, a really odd payrolls report. Very difficult to exactly sort of pick the bones out of such a hectic payrolls report, where you saw jobs declining by 33,000, but at the same time you saw average hourly earnings up by 2.9%. So really sort of contrasting factors in that payrolls report. Ultimately, the dollar weakened. But you look at the movement on Treasury yields, for example. Treasury yields were strongly higher. Yes, they did correct back as and that drove the dollar sort of lower ultimately, but they are still breaking out. And you look at, say for example, the spread for Bund under Treasuries still widening to 190 basis points. So yeah, I mean that would suggest we are still going to be on course for a test of that 1660 low, as that chart certainly has positive correlation configuration there. But what we have seen is the dollar closing around the day lows on Friday, just around about those levels now, and not really seeing too much direction today. But certainly I think in terms of that dollar correction, we've seen gold rebounding. That rebound on gold has also come as rumours or suggestions are that North Korea could be preparing another missile test, and that has helped to support the safe haven gold and pull that higher today. Now what we have got is basically equity markets which are sort of broadly flat. We saw the S&P 500 mildly lower on Friday, although as I said rebounded into the close. Nothing too significant in terms of direction on the Dow or the S&P 500, both of which are closed today for Columbus Day. But we're seeing sort of FTSE 100 underperforming as you could expect with that significant rebound in sterling, but generally speaking markets are flat other than that. So what about my chart of the day, which is the Euro Aussie? Now what we have seen is the Euro versus the Aussie trending higher quite strongly throughout this year. Following on from the initial sell-off into February, we've seen a nice uptrend formation going through. Now what we have seen over the last sort of few months is basically the market trading sideways, but obviously with this sort of succession of higher lows. But that trading sideways move is starting to break out again. The market has just closed on Friday at a multi-month high, the highest since the that June high of 52.25. And what we have got is a continuation of that move today. So the market is really looking to confirm that RSI above 60 again. Needs to continue above 60 to sort of the low 60s, mid 60s to really confirm the move. But MACD line is beginning to tick higher. Stochastics are looking positive as well. So it looks like the market is breaking out, and it looks like it's on course for a test of 52.25, which is that May high. So looks to be as though that little corrections are a chance to buy. That is reflected in this hourly chart. Hourly chart configuration is positive now, with the RSI sort of finding support above sort of 40 to 50 in the last few days. MACD line is positive, stochastics positive. It all looks pretty decent with a succession of higher lows. 50.65 and 50.25 being a couple of support levels there, but certainly in the last hour again the market seems to be breaking out, and it looks like it's going to be confirming this move for a push towards 52.25. So I wish you good luck in your trading today, and I will speak to you later. Thank you.